Are investors leaving California? And what is happening in the rental market here in San Diego County and how that is going to affect the real estate market. So San Diego used to be one of the hottest rental markets in the country. But in 2026, rents are falling, inventory is rising, and we're seeing investors starting to leave California. So there's many reasons why investors are leaving California. I guess the one that I hear the most often is investors are finding better opportunities in other parts of the country, better capitalization rates, newer properties, laws geared more towards landlords, things like that. Depending on what part of San Diego County, the rents are down between 3 and 7%. So should you invest or stay invested in California, or is it time to move your money? Now, there are good opportunities for investments all throughout the country, depending on what you're looking for and what you're comfortable with. But if you're someone that wants to invest or stay invested in San Diego County, here's where you should be looking. UTC, University City, or Sorrento Valley, that area, very high demand because of the job opportunities there. A lot of biotech jobs, things like that, and a lot of people moving there and choose to live in that area because it's close to their job. Next one would be lifestyle demand opportunities. For example, North Park, Hillcrest, PB, beach communities, things like that. They're doing pretty well right now because of the lifestyle that those places have to offer. Next one would be the college areas near SDSU, USD, UCSD, places like that. They're in pretty high demand now. Why? Well, college students need a place to live. Now, probably the biggest one you would want to stay away from if you are an investor looking for a rental property would be the downtown area. Why is that? Well, it's just oversupply. There's too much available. So much so that big companies like the Irvine Company have chosen to remove themselves altogether from downtown San Diego. So there's also places in North County, like for example, like Vista. Vista, a great place to live, nothing against that. There's been a lot of building up there. There's not a ton of high-paying jobs, and it's not super close to places like Cal State San Marcos. Then lastly, the short-term rental markets. That is a whole nother conversation. There's some really good ones, and there's some really struggling ones, and there's some uncertainty of changes that might happen in that market. So that's why it's kind of struggling. Where are these investors going if they choose to leave California? So the top 4, Texas, Arizona, Nevada, and then all of Southeast US right now is a great parking spot for a lot of these investors to park their money. So if you're someone that's thinking about renting a place, or you're new to San Diego and want to rent an apartment or something like that, downtown, obviously, you might be able to get some good opportunities there. On another one, the luxury apartment buildings are struggling right now because of oversupply. So if you want to spend a little bit more money and live in a luxury apartment building, take a look at there because they can give you some pretty good deals right now. So for you investors, we're doing a lot of 1031 exchanges right now. Both investors looking to stay in California or stay in San Diego, and it's just exchange one property for another one that's probably a better opportunity. Or we're seeing a lot of investors 1031 exchanging outside of California to those states that I just mentioned. So if you're thinking about doing that, we would love to chat with you. So what does this mean for the overall real estate market? Now, several years ago, the rental market was so hot. I'm talking hundreds of applications in the first few days of a rental property being on the market. Those days are over, but when those days happen, it pushed more people into buying a home than rental because they just couldn't get one. But now that the rental market has softened significantly, and it's cheaper for people to rent now than it was a couple years ago, we're seeing buyers being pulled from purchasing homes to remain in the rental market because it's cheaper. And this is one of the reasons why that we're seeing homes taking longer to sell, even though inventory is down and prices remain the same. That's because that we're not seeing a huge push for buyers to come out of the rental market into the homeownership market. So for you investors that have good properties here in San Diego County with good tenants paying good rent and their leases might be coming up, I would really consider not adjusting their rent, or at least not too much, because you'd be risking them maybe moving out and then struggling for you to find another good tenant that's willing to pay what they're already paying right now. Just a quick tip. Lastly, just outside of San Diego County, if you go to, say, LA County, those rents are down as low as they've been since 2022. So we're not alone, guys. So final thoughts. If you have a rental property here in San Diego County, don't panic. Prices are holding steady. Even though the rents are declining, prices are holding strong. So it just might take you, if you're someone that's thinking about selling, it just might take you a little bit longer to sell. So just be patient, but we're good. And if you're interested in hearing about other spots that we're seeing a lot of people going at that are great markets across the country, we'd love to have a conversation with you. All right, that's it for today. So next week, we got the data coming to you on the market update. It's the end of the quarter here in San Diego, and we'll see what's happening.